Mark, let's start with what's happening in Hong Kong. Excitement around Chinese property names latterly. Excitement since the start of the year, it seems, around Chinese tech names. What do you make of the positivity today? The Hang Seng up by 2.6%.
Yeah, there are a lot of drivers to the moves we've seen in recent weeks. It's been quite an extraordinary run over the last few weeks, but it makes sense. From a macro point of view, the drivers of US exceptionalism are being eroded. And so therefore, people are going to look to where else in the world is a discounted stock market. Now, Hong Kong is both a large and liquid and very discounted stock market that is going to benefit from the productivity gains that we're going to get from AI in a world where people are going to going, there is an alternative to US mega cap tech. Very much there's an alternative. There's an alternative they're being forced to consider. And then on the micro side, yes, we have support for the property sector, and we also have a little bit of enthusiasm specifically around the China tech sector. And we generally have a slightly improving China story at the margin. Again, this is not a very positive story. It's not a super bullish story. It's more that just there was excess negativity priced. But in fact, the policy actions we've seen under the US administration so far have been at the margin relatively beneficial for China compared to much of the rest of the world. Yep. If you take your base case of expectations of where we were a month ago.
Mark, has the Trump trade gone from being a positive one, a risk-on one, to being a risk-off one?
No, I don't think that's necessarily the case. I think it's less good for the US than people want. I think it's more negative for US stocks than probably is the consensus. I think for the rest of the world, it's a little bit undecided at the moment. I think, maybe it is a bit more of a negative one, but I don't think people were particularly enthusiastic around the world. So again, I'm answering that question slightly in terms of expectations. Going into Trump taking power, his inauguration, the expectation was it would be positive for US stocks and negative for the rest of the world. I think people are realizing it's not great for US stocks. It's a lot more complicated than that. And that for the rest of the world, it's hard to know still, but they were already priced very negatively. And that's why you're seeing beaten down markets like China, like Hong Kong, like Europe doing really well as people are saying, well, maybe it's not quite so bad.
Mark, sticking on that theme, maybe you can help us with a little bit of detective work. This morning, Valerie Teitel and I were trying to figure out why the Japanese yen is so much weaker, given that JGB yields have actually risen quite a bit, and we are seeing this geopolitical risk. Why is the yen weaker today?
I cannot really explain quite the short-term move, but look, you know that I'm structurally not convinced by the yen here, but also a large part of this is, of course, we are seeing general kind of dollar strength out there. I think that some of the tariff measures announced so far, obviously Japan is going to be a little bit vulnerable to that steel story, and I think that one of the narratives out there is that previously it was assumed that allies would be safer. Now it's quite clear that probably the biggest victims of US tariffs will be the EU and Canada, and maybe not, and that now probably applies to other allies like Japan, and not the presumed enemies in terms of policy like China.